Hi, this is Jeffrey Kerr at Kerr Financial Group. Today is Friday, February 2024. And last 3 days have been full of big announcements for the financial markets. Wednesday was the Fed announcements on interest rates and Jerome Powell's press conference. Yesterday, three earnings after the close: Apple, Amazon, Facebook. This morning, January employment data, and also this morning, Puxatani Phil with his forecast on the weather for the rest of the winter. And we'll have to double check with Phil on financial market forecast as well. The Wednesday afternoon, Jerome Powell, kept as expected, kept interest rates the same, but during the press conference, basically squashed any possibility that the Fed is going to cut rates in March. So now the markets are looking out to May, June as a possible first interest rate cut. It's amazing how much the markets are focused on looking for the first cut and relaxation and lower interest rates from the Fed. Yesterday, Amazon, Apple, good numbers. Amazon's up 6% today. Apple down a little bit, but they came in. They forecast back in December they really weren't going to see any growth, and they did have a pretty sizable decline in December in sales in China. But really the star is Facebook. It's up over 20% today. It's crazy. 20%. The stock price is higher on their news announcement. And then for this morning, the employment data much stronger than expected. So that also probably pushes out maybe beyond May any possibility of an interest rate cut. See how the Fed reacts to that. I would guess that Powell knew of the strong employment numbers when he did his press conference on Wednesday afternoon. It wasn't like a surprise to the Fed. So I think again the markets are focused on interest rates and anything that will move them. Again, the employment data, earnings, job growth, and like that. I think another thing that's going on is that the interest rates, the government interest rates, the treasuries have really come down hard in the last few days. Middle of last week, the 10-year was at 4.18, and then on Wednesday afternoon it was at 3.86. It's up, today back above 4% because of the employment data. But you got to wonder why the interest rates on the Treasury fell so hard in 6 trading days. Is that forecasting, recession, softer economic data, or is there also the regional banks have really been soft, the stock prices, some significant losses reported, and is there a banking problem that might become systemic? So just to round up, and again we'll check with Puxatani Phil over the weekend for some forecasts of the financial markets and be back on Monday. Please like and subscribe on all platforms. Thank you for listening. Talk to you then.